No matter where you are seeing prices going up all over the place. Inflation is out of control. And that's the central theme of today. The first thing I want to look at is rising prices. The second thing I want to talk about is the transitory what? Yeah, you got to watch for this one. And the third thing we need to discuss is the stocks that simply don't stop. They're going out of control. Nothing in the economy seems to have any impact on the stock market. And if you stay until the end, I'm going to give you 5 tips to become more self-sufficient. Yes, all of that and more. Let's go. I have shown you many statistics, many different indicators, ways to measure inflation, whether we're looking at the official statistics or whether we're looking at something like shadow stats or maybe some more anecdotal evidence where we see it at the grocery store ourselves. This right here comes directly from the New York Fed, and they're giving you the expected inflation rate. Nobody knows what it's going to be here, but you can see that it has been rising. The numbers, quite frankly, they don't matter, but just to give you an idea, just to give you a sense of what's been happening, yes, in fact, this has been going up and up and up and up. As time moves on, the thought that, oh, maybe this isn't so transitory. Anyway, I'll cover more about that in a minute. Now, I have shown you numerous companies, and so many of them have talked about the fact that raw materials are going up in price. We are increasing the prices that customers have to pay. If you asked people a year ago if they would do that, they would say, no, absolutely not. The companies are just going to take the hit. I said over and over again that they're just going to pass the cost on to the customer, and now we've seen that repeated over and over again. 3M stock slides as the CFO cautions on inflation impact to the Q3 outlook. And 3M of all companies, they are seeing some serious demand, but still, as they say here, the input costs have been outpacing the price increases over the current quarter. And this has been going on now. You see the prices of getting things, moving product and making things is simply much higher than it was a year ago. And of course, that impacts people. That's what really matters. Now, this right here is just talking about families have been facing higher prices at the grocery store recently. This is the White House, by the way. Half of those recent increases are from meat prices, specifically beef, pork, and poultry. And just saying that's where all of this is happening. Interestingly, just 4 conglomerates control the majority of the market for each of these 3 products. And the data shows that these companies have been raising prices while generating record profits. That's what they're blaming it on here. But there are so many different factors today. It's not just price gouging. In fact, I have heard directly from people in different industries talking about how when 2020 hit, early 2020, they were trying to get into the hand sanitizer business. They're trying to get into all these different businesses, startups, and they were looking at the plastic bottles, and these plastic jugs really were so hard to come by that the prices accelerated. And we are talking about people that are going to sell a product to the consumer, but those input costs, the material, like just the container, you didn't think that would cost anything. But of course it does. And suddenly the price jumped 5 times. Why? Because the shelves were empty of it. The manufacturers of it had suddenly run out. So you started to have to go to suppliers, manufacturers that maybe were, not necessarily the ones you would want to deal with, but you had to. Their prices were higher. They don't make enough. They don't manufacture enough. They don't have the supply chain ready for this kind of thing. And suddenly they had a high demand. Prices are rising. Here we are a year and a half later. And I do think, though, that we are experiencing a very unusual circumstance. And there are certainly things that are fishy. Grocery stores headed higher. That's Kroger saying that. Pork prices jumped 12%, poultry prices 6.6%, beef prices 14%. Look at it all, but understand that Kroger is doing this. They're increasing their prices. It's not as if it's just one company or one place. Yeah, they can probably hold off for a while in some cases, but they have been increasing. Nestle sees higher input cost inflation next year. The CFO there saying the same thing. thing. Okay, so it's all different industries, it's all over the board. Supply chain crisis will leave a permanent scar, according to UPS. Delivery Group's international head says manufacturing and assembly will become more regional. And that would actually be a great thing. If you could get stuff to be built where you live, my goodness, that would be fantastic. But the way that things have been set up today, it has been designed to be the exact opposite. Let's buy things from the opposite end of the world and then ship them in. And then that's going to be a fantastic thing because, it's cheap labor over there. And, even considering the shipping, timing, and the costs and so on, no big deal. But now, over the last year and a half, we have realized very, very much so why that's a problem. Look at the price of aluminum today. I'll show you some others, but you're talking about $3,000 a ton. For the first time since 2008, we are at that. You look back at those charts a few years after 2008 and you said, wow, these prices went crazy, so astronomical. And now look at what's happening. It looks like it can far surpass what we have seen. Just, it seems like yesterday, but 2008, over a decade ago. Look at this. Sprott's fund buying spree propels uranium stocks to a decade high. I just talked about this a few days ago, and anybody that bought in has already made money. It's crazy. It's crazy to see the amount of money that's been flowing in to uranium today. This actually gives you access through this ETF to the physical uranium, but even these companies, the uranium companies are doing very well right now. The retail traders are picking up on that trend. Wall Street Bets has gotten in on it apparently, and the chaos that will bring. Let's talk about this a little bit in the Money GPS Insights. I think it's pretty obvious, but the prices that you pay for just about everything will continue to rise. Supply chain issues are out of control and actually are compounding on, basically every day. I'm seeing news and things are getting actually worse, not better. Inflation needs to be offset by a hedge, as well as people need to get their preparedness on. I'll talk more about that in the tips at the end of this video. I thought this article was really interesting, something to ponder, why a monopolized economy leads to inflation and shortages. And they do discuss this in various aspects, just showing you that when you have these conglomerates and you have they use the example of McDonald's, people cannot repair their own machinery. They have to go through a special, chain of command and so on. And that presents itself with a problem, especially as we see today. If they were only allowed to fix their own things, they wouldn't have this issue. They talk about making the ice cream or whatever, and the machines are down. You gotta wait around. So these things present themselves with an issue. If you want this, it will be in the description under the sources as always. Now look at this one. Energy prices in Europe hit records after wind stops blowing. Yes, believe it or not, this is in the Wall Street Journal. Heavy reliance on wind power, coupled with a shortage of natural gas, has led to a spike in energy prices. All you need to know is people are paying more. And guess what's going to happen next week, and the week after, and the week after? And it could be any excuse, okay? Any excuse. The sky is blue, the sky is green, the grass is blue, the grass is green, who knows, whatever. Everything is rising. And then we go into this. Check it out. Since 2014, energy capex, that's capital expenditure, has declined as the ESG concerns rose. All you need to know here, oil capital expenditure has declined right here. You could see this. This is 2013 where I start that. And for the most part, it is declining. On the right-hand side, more volatile energy markets are likely to become a common feature of the green transition. What I want investors to take from this is simply put, there is this huge push for green energy. They are giving incentives to businesses and to individuals. Put solar panels, do insulation, whatever it is, any type of green energy and environmentally friendly behavior is rewarded with government incentives, tax breaks, write-offs, whatever it is. You know that there are about literally trillions of dollars that are flowing into this infrastructure, but also into the funds themselves. And that brings me to this here, which I thought was hilarious. I think I might have touched on this, recently, but now the Wall Street Journal's talking about it. Funds go green, but sometimes in name only. Companies are turning their struggling funds green to capture the flood of cash into sustainable investments. They talk about the fund being an ESG fund, a green fund. It's eco-friendly, but it literally has nothing to do with that at all. I have shown you the ESG funds. Apple, Amazon, Facebook, Google, whatever. All of these companies, what does it have to do with that? It doesn't. It doesn't, but it sure gets a lot of money flowing in, doesn't it? Crazy, crazy, crazy. Look at Deutsche Bank, your favorite bank, and mine. This is funny because if you look at the dates here, okay, we're seeing May, June, July, September, and just look at this. As time has gone on average, more of these individuals in their surveys, just like Bank of America has the fund manager survey, Deutsche Bank, same thing. The inflation they're suggesting it's mostly permanent, that has increased. So as the time has gone on, more people are starting to say, whether it's investors, whether it's individuals, they're starting to say, well, yeah, maybe it is permanent. Okay, well, maybe it is permanent. Like more people are just getting used to it. Why? Because the time has gone on here. We've gone past the point at which inflation should have come down. If it was going to come down, this would have been the time. I talked about September 100 times, and here we are. Inflation just keeps going higher. Who knows what it'll be next year? But at this time, that's all we can do is see what we have in front of us. Mostly transitory, by the way, has declined over these months. So there you have it. This is the way that the investors are seeing it, multi-billion dollars worth. But what about stocks? This is talking about a correction. Do you think a 5 to 10% correction is going to happen? They asked, and the majority believe that yes, by between 5 and 10%. 31% say there will not be a correction before the end of the year. If you look at this going back over the last year, what has happened? There's only been basically this one instance in late October where there were any issues. That's it. And it was just a small correction back up and onward. I don't know what you think, but this right now at this time, it just shows us how the markets are simply ignoring everything. Everything. It doesn't matter. They're ignoring it. Just like they did in February 2020, they ignored it all the way. Wall Street sees Treasury with debt limit break glass plan. You remember what happened back in 2011. Things got hectic. Things got crazy. And now the suggestion is that that will happen again. Let's be honest here. They're just going to raise the debt ceiling. Okay, let's just end it there. Now, I've been covering Evergrande from China, huge property developer, okay? They actually, the company seems like it's collapsing. And so they actually, there's a translated, post that they put on their own website, evergrande.com. And I thought it was interesting that they had to actually come out and say this. The recent online remarks about Evergrande's bankruptcy and reorganization are completely untrue. The company has indeed encountered unprecedented difficulties, but the company resolutely fulfills its corporate responsibility, goes all out to resume work and production and guarantee the delivery of buildings, try all means to resume normal operations and fully protect the legitimate rights and interests of customers. Yes, don't worry, you're taken care of. You can trust them, just like you can trust Lehman Brothers and Bear Stearns. Awesome. Good stuff. I don't know what's going to happen, but I wouldn't trust anything that is posted like this. In fact, it makes me more skeptical. We'll see what happens. Now, you stay to the end of the video. Thank you for doing that. This is 5 tips to be more self-sufficient. So ultimately, this is just a few tips, of course. This is not an exhaustive list, but I want to bring each and every video to have tips. So, of course, your food supply, that's key. That's important. The prices are rising. Prices are rising. What can you do? No matter where you live, you can grow food, even in the smallest properties, indoors if needed, with an aero garden or sprouts in jars. Seeds from the food you're eating, you could plant that in the ground. Using things that you would have tossed out like food scraps and shredded paper, you can make compost, and that grows your food. All of this is very, very cheap, okay? Water. Harvesting your own water, not for the cost efficiency, but for self-sustainability. Having your own water supply in areas that are prone to drought could literally be a lifesaver. Seek water harvesting on any scale that you can afford. Some people just do it for their garden. Other people do it on for their whole house and so on. Filter your water by any means possible. Drinking water, whole house filter, shower filter. Store the water for the unfortunate events. Preserve. You can preserve things. Canned, jarred food. Buy in bulk. Preserve them. Freeze-dried food lasts 25 years. Income. Don't forget about this, okay? This is huge. Have a secondary source of income. Have an income stream that doesn't rely on your geographical area where you are. And if you're selling a product or service, have that, make it be available to the whole world, because you don't know what's going to happen in your area. Things might not be so good. And energy. Relying on the power grid leaves you constantly paying more, as so many people know. And the interruptions, we're expecting more and more interruptions, whether that's like you see in Europe, whether it's like you saw so much in the US right now, solar panels, geothermal, backup generator, natural gas, backup generators, or, there's different ways, but anyway, the point is anything that you could do for your own energy preparedness is something that's going to benefit you in the long term. That's just a quick explanation. The 5 tips to become more self-sufficient. I hope you appreciated that. I'm going to be sharing these PDFs through the Insiders. If you are not already, you've got to join the Insiders. It's right here up at this card or at themoneygps.com. If you haven't already, and I don't know why, you've got to give this video a thumbs up. Hit that like button to support the channel. If you haven't seen this video already, you definitely want to check it out. Click it, and I will see you there.